Right, hello everybody. We've got Sarra Hawes from Hawes Construction Group here today, and we're going to be looking at kind of what they do as a business, and then obviously what their kind of long-term plans are, and then really what kind of hurdles that they're going to, they're anticipating that they might have in order to reach those goals. So I'll introduce you to Sarra. Do you want to tell us a little bit about your business, how it's formed, all that kind of stuff? Like like an elevator pitch, but you can have like a little bit longer. Imagine we're going up the Eiffel Tower or something.
Thank you very much. It's myself and my husband Bruce. We set the business up about 12 years ago. And we are a building contractor. Our background was building contractor. So although we were small when we started, we had high level of accreditations, safety, etc. So we knew from that point of view. And we work on projects between, I would say, 50,000 up to about 2 million. Our sweet spot is refurbishment work. We have a couple of specialist skills that we can bring into the mix with refurbishment work. But we do new build, and that is commercial, residential, education, health, across the board.
And the sweet spot with the refurbishment, is that kind of, you're talking like a 2-3 bit house that's a bit dilapidated and you want to refurbish it, or is that the sort of thing? Or
no, we can go up to £1 million refurbishment. Yeah. Sweet spot is we employ approximately 11 guys of our own, various trades. Also, Bruce, for a short spell of time, worked for a company that did deconstruction works. So they did diamond drilling, concrete cutting, a lot of prop-in works. So that expertise is huge when you come into refurbishment works. Yeah,
definitely. Yeah, I had some friends who did diamond drilling. They worked for a firm in Shoreham, and they did a lot of work at New Haven Harbour. There was some diamond drilling thing they were always really busy.
Yeah, it's amazing.
Very bespoke, isn't it?
It is very bespoke. I find it really sexy, I must admit. It's amazing what you can do and the tools that are there.
Yeah. Diamond drilling is sexy.
Yeah, it is, really is.
No, that's a clip for you, Luke. And you've been going for how long? 12 years?
12 years, yeah.
And you're kind of based, your kind of geographical areas, the southeast or something, or you go a bit further afield? Sussex.
We've been very fortunate the last 8 years, mainly Sussex based, and the surrounding borders really.
Yeah, okay. And in terms of growth, I suppose, so you started, it was just you and your husband, and then how long has it taken to get to where you are now? Like, as in, was the growth with the curve of the growth, was it kind of very steep, or was it kind of been very organic and gradual?
I would say the first 3 to 4 years was quite organic. We were quite surprised really how steadily we grew. We increased the team size. We were only working from a sort of an office at home to start off with, so our overheads were low. So it's been quite proportional with the amount of people we took on with our growth, and then the projects we took on. We had ironically, we had a really good year when COVID hit, because we had a job with the health service, so we were protected in being able to work and get materials. We also did a job in our local town centre, which meant we could work all hours because there wasn't many people around. So that was a really good year, but then after that we sort of took a bit of a hit. Yeah. And we also worked on a project where they didn't pay us all the money we were owed as well.
Okay. And is that something that's still ongoing now in terms of recouping that money, or has that been written off?
I think we've had to write this off this year, which is really heartbreaking.
Yeah, big sting that, isn't it?
You have to do that.
Did that affect you adversely, or you were able to weather that particularly? Or?
We were really fortunate in lockdown. We got a CBILS loan.
Right. Okay.
And that's the only reason we're still here.
Yeah. Okay. Fine. So what does your kind of day-to-day look like in the business then? What do you kind of, where do you fit into it?
So I've got a bit of a hybrid role really. Yeah. In the earlier days, I used to be actually physically running projects. So I would be leaving the house at 6:30 to get to wherever we were working, and then manage it throughout the day. I would say more so now run the office. So I look after the financial side. HR can bring its ugly head every now and then, looking after the sort of the running of the building, and still looking at tenders and the pre-construction side of things as well. Okay.
So it's more the kind of admin side of things. So who does the kind of business development as getting new clients and that kind of thing?
So that's part of my role, but I'm aided now with my new business development. Lisa Picard has now come on board.
Okay.
So she brings a wealth of expertise. We used to work together about 20 years ago at Llewellyn's, so we know each other really well, which I think you've got to have that element of trust with somebody that's going to represent you as a business development. So,
I don't remember Llewellyn's, but for those viewers that don't know, they were quite a big building firm in the southeast Eastbourne area, and I know a lot of people. Yeah, and they got bought by Rock Builders, wasn't it? Yeah. It's a little bit before my time, but I know that. My next door neighbour, Jamie Simmons, who you probably know, Talk Group, so he was part of that as well. And it seems like a lot of people that I come across, they were
huge.
Part to do with that.
Yeah, and they train people really well. So most people that left there have gone on to do really well. Yeah,
that's what I come across that quite a lot, actually. It's a small world.
Very incestuous.
Definitely. But good, it shows that they had a good model, and obviously Rook Builders, obviously saw that and decided to snap that up at the right time or whatever. I know they kind of didn't do all of the aspects of it. That's why people like Jamie ended up going into the shop fitting side of things, I think, because they don't do that. But that's interesting. So in terms of the kind of business development stuff, so what's the kind of focus then? What's the sort of 1 year plan, I suppose, the immediate, because you've got Lisa in now, who obviously I know as well from various other things, and she's going to be doing, does she have like a kind of clear remit? You've got some KPIs for her to hit or anything like that?
I think we're still in the early days. She's sort of trying to get us organised, I would say, first of all. We've got portals that we're part of, so it's making sure that we've got the information there. I suppose it's standardising a lot of the information I've gleaned over the years. It's putting that so that we know if a particular project comes in, this is what we would use, or individualise if we need to. She's been working on the website, making sure that is maximised. And I would say the target for the year is to try and probably expand our client list, raise our profile with more of the architects in the area if possible. And the other thing that we've done a little bit of more so this year and maybe a bit more next year is we've gone for awards and sponsoring awards, because we're quite passionate about giving back if we can.
Did I read somewhere that you're CIOB?
Yes.
So do you pull upon that at all? Because that's quite, for harking back to Jamie actually, because he's CIOB, and they pull across that quite a lot, because it's quite common in the building industry. People have got a lot of knowledge, but when they look for like professionals, because I always just, forgive me if I'm wrong, but I describe like a firm like yourselves, like that bridge between like a chartered surveyor-y type person and then like Joe the builder, who's really good at doing, like, has got the skill set, but maybe not like the professional admin and the qualifications, if you like. Like, that's not to say that they can't do it. It's just that they don't necessarily, like the paperwork side of it or the professional side or the qualifications is not in their remit. They're much more hands-on, if you like. So, and you're kind of the CIOB stuff, like with that type of contractor, really bridges that gap, I would say. So you almost like don't need a surveyor overseeing it, because you've kind of almost got that chartered surveyor qualification anyway. I don't know if you kind of pull upon that at all much in your marketing or whatever.
I suppose we have shouted about it, because it took me, I did the IOB course back when I was in my early 20s, but didn't manage to get past it then. So it's been a long journey for me to get there, and I did it through the professional development section last year. And I suppose, and it's the equivalent, I think, to a master's degree, which I couldn't believe, because imposter syndrome massively. I would say it gives us the little bit of credence that we need, and I suppose we shout about it from that respect. I'm just interested to know, really, because I think it does distinguish the building companies, if you like,
you know, like it's a different type of building company that you're dealing with. You know, you would expect that sort of company to have offices or like have much more access to like professional stuff, like being able to work out architects' plans and drawings, not be so heavily reliant upon those other professional services as say like your standard builder, if you want to make a comparison. I know it's not really the true terminology, but yeah, I mean, I find that a lot of the projects where we do the building surveying, if you've got a company like yourselves that have got the CRB, it's almost like you're kind of doubling up on some of the work really here.
Yeah.
Like you're probably paying a small premium for this building company over John the builder, but you're also paying for us to supervise them. But it's a pleasure to work with them. But from the client's point of view, they're more akin to your bigger projects like heritage work and things like that, like your £2 million projects, where they're like, we need the super quality builder as well as the surveyor to oversee and work in conjunction.
And I think it brings a level of accountability as well. It's almost like we're prepared to stand up and put ourselves forward. The other thing that we're very passionate about, if things aren't quite working right, or if we've done a job and things haven't, there's something gone wrong, we'll go back immediately, we'll put it right, because that's the bit that people also remember. It's the bit where you will stand by what you've done as well.
So with the kind of jobs that you're going to aim for, you mentioned there's quite a big difference between like a £2 million project and a £50,000 project. Presumably, in terms of numbers, you've got a good idea which one is actually more profitable in terms of, is the £2 million one more profitable than the 50,000? Not in the sense of monetary, but like what the gross profit margin might be on it. Are you more likely to make money out of the bigger projects or the smaller ones? Do you know?
That's a very good question. I would say it depends on the type of project. So if it's either residential or commercial, because I would say commercial, the VAT normally isn't an issue with commercial. Also with residential, I think clients can be a little bit more in the nicest possible way. They might change their minds, or there might be something in there that's a little bit more that might change basically. Commercial normally is quite sort of straight down the line and it'll stay as the plans were.
I suppose the question comes from, I wonder if you had like a clear remit to what you're going after. Like if you could just do £2 million projects, for example, is that where you want to go? Or do you want to do the mixture because it's like stability, because you've got the drip fee coming in? But if you had enough of the £2 million ones, would you stop doing the 50? Like that's the sort of, I suppose that's the question, isn't it?
I would say,
like if you grew the business enough and you were like 2 million was the new 50,000, like you're doing 10 to 2 million, is that better than you going, we're stopping at 2, but we love doing the 100 grand ones or whatever? Like that's the kind of question, I suppose.
I would suppose one £2 million project a year would be sufficient because of the commitment financially that we face in there and the resources that we have to put in. Sweet spot, again, I say for project value is probably about 650 to 800,000. That for us is the perfect amount, and we could maybe do 3 to 4 of those a year. And I would say the 50,000, we look at those as more of acorns. So there might be that a £50,000 project might lead to maybe a bigger one later on, maybe 2 to 3 years time.
You do like a big mansion house and you do a 50k repair on the roof.
Exactly.
I get that model. I suppose it's potentially not going after the domestic market where, like I referred to at the start, where it's like a 3-bed house and it's like landlords bought in, needs refurbishment, new kitchen, new bathroom. They're like quite.
We struggle there.
You would struggle to compete against.
Very much so. Against, as you said, the guy in the van who's very, very good, but he's got no overheads. He hasn't got maybe the accreditations we have. That's the bit that we try and say to our clients, we're happy to price work of that value, but we probably will be too expensive.
It's a lot more price sensitive, that lower end, domestic end and the lower end of the market. It's a lot more price sensitive than your kind of 2 million projects. Whether it's 2.1 or 1.9, people are going to look at the quality of the builder at that kind of value. That's interesting. So I guess if you grew the business enough and you had like the 2 million became the new 10, the 10 million became the new 2, is that the kind of way you want to go with it? Or?
No. I think
because if 2 million project is enough to keep you going for 1 year. It's a bit sort of, if you had too many of them, I guess it's all eggs in one basket type stuff.
Exactly. Yeah. So the model I said about maybe 1-2 million and then 3 to 4 of the smaller value sits perfectly for us. Okay. We don't want to grow too big and stretch ourselves too much.
Okay, fine. All right. Well, that sort of brings me neatly on to kind of what your sort of, I suppose, your kind of goals are really for the future. So in your nice little sheet that we give people to fill in, so you've got your 1 year goal is to sustain our team and continue to win projects that allow us to grow steadily and make a reasonable profit. Our son Jake has joined us in the office after doing carpentry for 8 years. He's going to start development section to the business so we can be our own client and miss out the middle person. Is that you're going to kind of buy refurbishment projects, so like buy a buy-to-let, for instance, or commercial premise, and then refurbish it and then rent it out or sell it?
Yeah.
What's the plan with that?
Yeah. So we've it's a whole new ball game for us. We've been sort of probably from January really researching it since Jake's come across, and it's interesting because we looked at new builds, but it looks like the price that people want for land is quite high, and I think from what I can gather, you need to be able to guarantee you've got 20% profit if you want an investment, somebody to come on board to invest. Mm-hmm. And with the cost of land at the moment, or what they're asking for, it's just not viable. Yeah. So we've been looking more at the HMO side of things, which is where our sweet spot comes in. So we could buy a property, split it into different sections, and then we would hopefully like to build a portfolio up and get a bit of a revenue from that. And
do you have a kind of net aim for that portfolio, like as in what it's got to bring in? Is there like a figure that you've got in mind?
Jake's got a figure. I haven't quite been able to
enough to
tax it out of him just yet, but
often it's people enough so that they don't need to fight for work. That's quite common. So if you need, I don't know, £5,000 a month income coming in before tax, then that's quite often people sort of target that if I can get 10 buy-to-lets generating £500, I've got my £5,000. Then if there's no work or I can give up my job, then that's a sort of fairly normal target for a lot of people.
I suppose the bare essentials is to cover Jake's costs for us at the moment.
Okay.
And then also the other thing is building up our reputation. Because at the moment, if we went to an investor for certain projects, we wouldn't be able to actually say, here's an example.
I think in terms of some advice with the investors and stuff like that, I think generally speaking, there is normally an abundance of deals out there to be done. And I always took the attitude of like, find the deal, make sure the structure's good, and then try and find the finance afterwards. Because you'll probably find somebody to finance something somewhere along the line. Somebody will do it. It may come at a high cost and you might have to redo your figures, but generally speaking, funding of things is not too bad. Okay. So a piece of land, you're probably right, you're looking at sticking in like say 25% to buy the land, but you will get somebody to fund the build costs. So the normal thing is, say the land's £500,000, you've got to put in 125,000 to do your 25%. Yeah. But then if the build cost, let's say it's £1 million to build, like you're going to build a block of 8 flats or something, and the build costs £1 million. As you know, the builder's a stage payment, so like you'll probably pay the builder the first £50,000 stage payment, but then the bank will reimburse you. Right. So you're always £50,000 out of pocket until the end, but the bank's not expecting you to continue to pay the builder. They'll probably like the fact that you have access to the construction, you've got the qualifications, because a lot of the time with these sort of specialist lending, they like you to put forward like a business case. Like we've had to say, like, we've got access to chartered surveyors, we've got experience of this project, and one of our surveyors has done this, in order to convince them. They're like, we'll lend you money on paper, that's fine, but actually do you have the skill set to see this through, and have you done the numbers properly? We need some convincing here. So you're probably in a really good place to do that side of things, which is part of the funding, believe it or not. They won't, like, you could have a lot of money, but if you haven't got a clue what you're doing, they don't like to lend even the smallest amounts against that. Okay. I think you could probably find bits of land, that need value added to them, that's a good way of doing it without getting the planning permission to start with. So you're going to take it on risk, but you can often agree with people, I'll buy the land at £50,000 subject to planning. I'll pay for the planning, so I'm going to put £5,000 into this. But if I get planning, I'll pay you £50,000. Doesn't matter what the site's worth afterwards, that the uplift in it is your benefit.
Yep.
And a lot of people will go, do you know what, there's a risk that you might not get planning. So actually, there's risk and reward here. Obviously, you would probably take some preliminary advice before you make that offer. But you have what's called an option, which is an option to buy it. So they can't then go, oh, we've got planning, we'll sell it to somebody else, or we'll pull out, or we're going to sell it to you for more.
Yeah.
It's a commitment from both parties that they're going to commit to this.
Right.
1 in 10, you think you're going to get planning, and then you go, I'll just dump £5,000 on it, and then it's not materialised, or I can't get what I want, or whatever it is, or they've come back with a different design and it's now not cost viable. Okay. But I would say that definitely you can look at that sort of option, and that's quite a cheap way. The other way of looking at space as well, which is quite good for us, but you can look for yourself as well, is flat roof space on blocks of flats. So often the roof, there's lots of permitted development rights to build on top of roofs. Yeah. And you can say, like, if the residents need a brand new flat roof, or if you get a tender pack through from a managing agent saying, we need this roof and it's going to cost £100,000, 10 of them in the block, they're all going to have to pay £10,000 to it. Rather than them put a new thing on, then a new roof, then we could build on the roof. So you can often get that very cheap, because you can say to people, well, rather than having to pay £10,000, we'll give you £50,000 for the roof space, subject to planning. So rather than spending £10,000, you're going to get £5,000 back in your pocket. So then they'll be like, okay, well, that's a better deal than having to spend £10,000. And of course, we've also got what we wanted, which is a new roof, because obviously you're going to have to put a new roof on because you've just built several properties on the roof. You'll get the odd ones that are like, we don't like the fact that it's going to be more monstrositous, the building, or we've lost the penthouse feel on the top floor, or whatever it is. But often, on your standard kind of very square looking, boring block of flats, which is really easy for planning, those are the ones that people really don't mind too much. They'd rather not have to find £10,000 to put towards the roof. So, and again, you could do that option with them and say, you can't sell it to anybody else, I'm going to get the planning permission, that's it. You also need to make sure you reserve the right to sell the planning permission to someone else. Okay. So that if you, on any of these deals, if you go, I can't get it to work as a business, it's too small a project for us, or too big a project, or it suits someone that's really good with groundworks or something, or like the white man in a van can do it, around when he's not got other jobs on. You want to reserve the right to be able to sell that bit of land off if you decide it's not profitable for you to do that at that moment.
Okay. Does that happen a lot in Brighton and Hove, would you say?
Yeah, you have to go and look for the deals, I'd say. They don't just come to you. I think as you build reputation, they will start to phone and say, we understand you did this. You are for that residence block this, even if you didn't do it. Yeah. And then someone will say, oh, well, word of mouth gets around. You can also put a lot on your website or social media and things like that you do acquisition of land, all that kind of stuff. But yeah, initially, obviously we're exposed to a lot of flat roof type stuff, and we either push it onto developers or we do some of it ourselves, depending on what our flavour is at any one moment. But I would say that that comes to us organically because of the business structure. Yeah. If we want to go out and get bits of land and the rest of it, it's normally just like spotting that there's a little bit of land, or someone's house is a bit dilapidated but they've got a patch at the other side, and you can be like, well, how about we do your house up, which is kind of what you want, but in exchange for this piece of land over here. Be creative about deals and stuff, and you'll find some people have not really thought about it in that way. Like, you can structure anything in whatever way you feel that's a good way, as long as you're kind of good at selling it to people.
Yeah, and do you find that there's lots of tricky little bits of land that you sometimes look at and you just think, how could you get something on there, and then you actually get past it?
Yeah, definitely. There's loads of little bits of parcels of land and stuff that in between buildings, or at the side of houses, or the back of houses as well, where access is a problem, all that kind of stuff. So often the bits of land haven't been developed on, generally speaking in my experience, for two reasons. One is there's some legal issue with like access to the land, or it's too near a power station, or there's some issue about it which needs resolving in order for that land to be developed. There might be a big pipe running through the middle of it or something under the ground. Or you've got a scenario where that owner of that property just doesn't ever needed to sell that land, you know, and then it might be that the property is then inherited by somebody and they go, look, we're going to sell the whole house, but it's got this plot of land at the side and we don't see the value in it because, you know, it's not really our remit. We've received an estate from, you know, granddad or whatever, and they just want to get the money back out of the estate. Those are the sort of ones. If you can get into them before they go to Rightmove or the estate agents. Then, so leaflet dropping, we've done that before as well. Just literally printing a leaflet that just says like, we buy houses, you know, can complete within 30 days, even if you know you can't complete in 30 days because it's complicated issues, but it's a starting point to have that conversation. Yeah. You deliver 1,000 of them and you get 2 phone calls. I think that's actually a good turnaround out of 1,000 leaflets. So you don't get much more than that, but that gives you access to somebody that you otherwise probably wasn't thinking of selling or didn't know how to sell. So there's that. But yeah, I think it's really good. Like a lot of people get like their retained profits and then they buy these kind of assets which are generating. I'm a big fan of that. Have like this trading business that's generating decent money, but it's like cash and it's cash hungry and you've got to keep doing. But then you take some of that profit and put it into like an asset that's very passive. I find sometimes people, and I'm guilty of this as well, take too much of that and put it into that because it's like we're British and that's what we do and we love the old buy-to-let model and everyone knows somebody that's got something like that. Yeah. But sometimes you have to invest in your business, so it's like you have this kind of like this is the thing that fuels all of that stuff, and if you don't give that the attention or if you draw too much from that, then you'll stifle that growth. You can actually earn more money in a trading business than you will ever earn in a property business. It's just that that's regarded as quite stable and nice assets. You can also pull upon the equity as well. So if you want to borrow money from the bank, you can say like, I have a second charge. So say you own, I know it's £500,000 property and your mortgage is 200,000, so you've got 300 grand equity in. If you go back to that land acquisition and you're trying to fund it, sometimes some of the banks go, we'll lend you all the money, but we just like a second charge. So if you don't pay us, we can come after that 300 grand equity that you've got in that property. Okay. So they're quite good things to be able to pull upon in times of need. Bit of juggling. Yeah, it is, yeah. Well, I always say, like, people ask me, like, how do you do so many things and the rest of it? And actually, a lot of what it is just juggling the money and the figures and the rest of it and making sure it's in the right places and so on. And some of it's liquid, some of it's tied up in assets, and it can get very complicated. You need to make sure you've got a good balance of it. Absolutely. Less so than like maybe running the actual business half the time is actually just looking at the finances. So hence why I start with the numbers and asking about like what the profits are, because it's of interest to me because I think it allows you to really understand your business, and so many business owners don't really know what they're looking at when they get their monthly management accounts, or they just wait for their accountant at the year end. And no, we have monthly management accounts. Yeah. Well, I would hope so. Yeah. So more longer term stuff. So you've got this kind of you've started to build this portfolio, and the business is growing, and you're kind of looking at these kind of passive assets and the rest of it. So that sort of moving forward from that, your kind of 3 to 5 year plans you've got down here is to continue to bring young people into the business as apprentices and grow them through the company. We have a mature management team, and I want to be able to bring through the new generation to pass on the mantle, to sustain a steady project pipeline to keep our team employed, to continue to develop our development arm to our own projects and showcase our expertise. So I think, as I was touching on, like the trading business is going to fuel that kind of development side, and eventually the development side will hopefully be making enough money that it will self-fuel itself. I think if you don't need to draw the money out, when you can get to about 10, that's normally generating you around about 50k a year profit after tax. That 50k often is a deposit on like a small flat out of town. Like in between Brighton and Eastbourne, you can pick up 2-bed flats for under £200,000. So if you hunt around, I mean, we paid 123,000 for one a 2-bed flat with a garage in Newhaven. So, and it rents out for £1,300 a month. So the figures really do stack up if you find those deals and stuff. So that deal is self-funded by the profit from that development company. So when you get to that stage, then you don't need to keep fueling it with the money from your main business. So in terms of the team, so you've got this kind of mature team, and you want to bring in the apprentice route. So talk me through the sort of feeling behind that then.
So we're throughout my career, I've always been quite passionate about bringing more people into construction because the skills gap is huge, and you can't beat bringing in young people yourself, training them yourself, because then they know the way you work, and you can just grow together.
Yeah.
It's just hard trying to find young people. I mean, I have got a management trainee at the moment, Molly, who's very keen to become an estimator. So she's doing a degree apprenticeship with us at the moment. And because we're CITB levy payers as well, that gets funded for us, which is really good.
Yeah. What's that, CIT? I'm not familiar with that.
So that's the Construction Industry Training Board.
Okay.
So when you get to a certain level, so you can join at any level. When your turnover reaches a certain point, you then have to pay towards it, but they will fund most of your training, health and safety training. They'll give you money towards it. And also higher level, they'll, like for example with Molly, they'll pay for the degree completely. My apprentices, I've got 3 trade apprentices, they pay towards those costs as well. Okay. And there's incentives to keep them on for longer as well. Yeah. So you might bring them on, and if they survive 6 months, you get an added incentive. Yeah. Okay. So yeah, it's a what's the word? The concept is really, really good. Yeah. And I trained through the CITB. There was a scheme, and that was 36 years ago. Okay. And I think if you manage it right, your company, the literally you can offset the costs completely, and it's not an outlay for you, and you then get somebody that you're able to bring through.
Okay. Fine. So the idea is to bring in the apprentices. They'll be trained up by the more mature team as the more mature team move on. So it's a good model. I think. I mean, there's actually a book which I would recommend you read called "Delivering Happiness," and it's about Zappos, which is the shoe people in America. They're a bit like, Shoe in the UK, the chain of shops. So they were like that in America, and their system was to never try and bring in somebody and insert them in the management level, to always be having like this kind of apprenticeship model, and everybody is brought up through the company, and they all therefore march the same kind of core values and all that kind of stuff, and they were really big on core values. It's a really good read, actually. The guy starts his journey off as an investment banker, and he buys this shoe company, and then he finds himself bought out of his other businesses, and then he has to put all his money into this one business because he's got nothing else to do, and then they grow it into this into that. Delivering Happiness, I think it's called. Okay. I'm sure they can look it up after.
Definitely interested in that.
But it's a good book about building a really good team that are happy, like in a big scale. I mean, they're employing like 2,000 people, but it's really designed for like anybody that's got like sub 30 members of staff as well, so that you've always got that kind of apprentice model coming up and replacing those people, or when those people do move on, which is always natural, people search for jobs and move on from you, you've got somebody lined up to do that. So, it's a good read. But I quite like that model. We've tried inserting people higher up above people and the rest of it, and often it doesn't really work that well, where we're like, right, this department needs a manager or a head of, and then you've got someone in and they just come in like a bull in a china shop, or do things differently, and then you lose some staff because they're like, I don't gel with that person. So
it's a very fine line. I mean, we were really lucky. We found a team member that was able to help Bruce at a certain level, so he's almost a mini Bruce, and that took us about 10 years. Yeah. Because you really, it's a fine tuning thing, and they've got to fit in with everybody else.
Definitely, yeah. Well, the book's quite good. It would teach, like, it explains, or like they tell their journey about how they kind of like sped up that process from 10 years to it being more like a 3-year process, essentially. So it's, it's good. It's got some good tips in there, as well as a story from somebody as well. So they got to the point where Amazon bought them out in the end, but they didn't want to lose their culture. So the agreement with Amazon is they could buy them out, but actually they had to continue doing that thing and make it look like it wasn't part of Amazon. So they weren't allowed to kind of put that corporate giant structure
really interesting.
onto it. So,
and that's still, that works.
Yeah, they did. I'm not sure. Like this, I think this is up to like 2015. This book, 'cause that's like when that happened. So I'm not sure if that's quite the same, because that's what generally happens. The founder goes away, and then over a 10-year period, it becomes what it wasn't in the first place anyway. So, but yeah, that was their remit for the sale, because they've been approached a few times. So.
Okay.
I've got 5 minutes. Yeah, no worries. I can always move the car anyway. So the kind of longer term plans, I suppose, are kind of 10-year goals, which I know always seems like a long way off, but I always say to people, you can achieve more in 10, like people underestimate what they can achieve in 10 years and overestimate what they can achieve in 1 year.
It's very true.
Yeah. So 10-year plans wise, to have the right team in place for your husband and I to take a step back from the day-to-day running, as we'll both be near to retirement age and we'll still need an exit strategy. So I guess it's kind of build the business so that at some point you can sell it, or it doesn't run it runs itself, or the management team want to buy it off of you, or whatever.
Our son might,
or somebody take over from you or whatever. I always think you should build a business like you're going to sell it tomorrow all the time. Like you should always like have a handle on the numbers. You should always build it with that end in mind, even if you've got no intention of selling it. So like have that goal, like it needs to be profitable. It needs the accounts to be spot on. It needs everything. So it's like, if I got an offer tomorrow from the management team or my son or whatever, it's ready. Yeah. Even if I've got no intention of selling it.
Almost like you could pick it up and give it to somebody.
Exactly. Yeah, it's really hard to maintain that all the time, because you get sloppy and you do things that don't quite fit into all of that. But if you have that mentality all the time, that really we're after bottom line, we want good balance sheets, cash in the bank account, good profitability, margins are kept safe. We haven't taken on any silly projects or anything like that. Then at any one moment, you're like, if I just wrapped it all up tomorrow and Rook Builders came along and bought it off of us, or whatever the modern day equivalent is, it is all ready to sell. I don't have to spend a year tidying it all up or going, we need to split this bit out. Like the development companies, you want to own those in a separate company and don't buy them in Hawes Construction, for instance. So you don't have to then go, I'm going to filter all of that out. The motor vehicles and things like that you're going to make sure they're in the company that you would be transferring, whether that's a management buyout or your son, or a buyout from a bigger company. You always got to have that end in mind, if you like. Everyone always thinks that they're like really close to that, but when you actually look at your books, you're like, actually, if I sold, I didn't want that to go, and I want to keep.
I've heard it could take 10 years. You need to start your exit plan 10 years before you actually.
That is probably true for most people, but I think if you always have that end in mind when you decide you're going to go, you don't have this. It's either one or two things. They spend 10 years trying to do it and get it ready, or they just go, sod it, I'm just going to just let it go as it is and I'll take the rough with the smooth. Yeah. If you plan for that now, then you won't have that 10 years or taking the rough with the smooth, I think. Yeah. But and then you'll have your property development side, which will bolster that as well, because you've got income coming in from that. And I guess that's the plan, really, to live off of that for retirement or something. Yeah. I mean, ideally, we'd like to maybe buy the unit we're in and have that as an income, because we've got the pension funds that you could use. Okay. So there's a few options still that are open to us. Okay. So I suppose we kind of got your 1 year plan, and then the more medium stuff, and then the long-term goals to be working on the business, not in the business, or maybe retiring from it. So some of the hurdles that are going to kind of maybe get in your way, or issues you might come across. One of the things, biggest challenges you put is, our biggest challenge has been winning work with clients where they don't have cost awareness of projects. This can be because they haven't been advised correctly, or they just ignored some advice. the work then costs too much for them to finance, and they don't go ahead with the work. I've got some experience of this myself in our surveying department, so I assume what you're referring to is what we would say is like someone asks us to tender a job and we get like 3 prices, and then we go, here's your 3 prices, and they're like, even the cheapest one is miles more expensive.
Yeah.
But they haven't looked at any of the advice or the fact there's like some contingencies in there. There's some unknown quantities like render repairs. You never know until you get up close to the building, that kind of stuff. Like they're not educated enough, or despite your best efforts, they still don't understand what you're talking about, or they haven't read what you're talking about.
Yeah.
Is that what?
Yeah, it's some. I've actually spoken to a lot of, because I'm part of the Constructing Excellence Club as well. I talk to a lot of consultants, cost consultants, and they will actually say, we've advised them what it will cost. They probably drew all the plans up a year ago. They've got cost advice, and yet they look at it and say, I can get that cheaper. Either they don't believe them, or they still think that we're all escalating our prices for some reason, and they still go out to tender. And we recently had a project where we were the cheapest. It was 4 prices, we were the cheapest, and it was still too expensive.
Yeah, I think that's quite common in my experience in this market, because especially with those jobs that you're experiencing, they were like the lower end of those scales or the higher end.
So that was probably sort of 750.
Okay.
It seems more prevalent than the last, I would say, 12 months, more than it has been for a long time.
I think the cost of living and all that kind of stuff that is fairly obvious in the papers, unless you've been asleep for a while, has really impacted on people's kind of ability to fund things, as well as the banks not lending as easy in some cases on domestic developments. But I do think it's an educational process as well, which we do struggle with a little bit, because you can lead the horse to water, but if it doesn't drink, then you can't really do anything about that.
Yeah.
So some of the stuff that we've done is holding kind of like workshops or open Teams calls and stuff like that with clients, to be like, before we put this out to tender, like, we've done all of this, you do realise, just to let you know, there's we're putting in 100 square metres of render repair. We might only need 50, but we don't know until we get up
Worst
there.
case scenario.
When I report back to you and it says, contingent, provisional quantity, you understand what that means. And then they're like, okay, so like, it's a bit like making a cake and you don't know how much sugar you're going to put into it. So we're going to say it's a whole bag of sugar, but we probably only need half of it. But if we need more than that, it's easier to put more sugar in than it is come back to you and ask you for some more money.
So you would always go in almost worst case scenario, rather than going minimum and then saying we'll need more money.
Yeah, so we're trying to explain that to people, and we're recognising that people don't read anything you send them nowadays. They don't understand what they're looking at, and people are really averse to picking up the phone and asking. Everything's all like emails and electronic back and forth now, and then they've got a paper trail to it. So we've been holding these kind of clinics, especially if they're like larger projects where there's a lot of provisional quantities, some contingencies
it's like
in
a
there.
Detail sometimes, isn't it, as well?
But people just don't understand what they're looking at, I'm afraid. Even when you're dealing with commercial people, sometimes they don't understand. Like, we deal with some work with the council, and the people at the council don't understand what you're sending. Like, they asked us to do some quoting for removal of asbestos, and getting it's an old library in New Haven, but they wanted quotes for removing the asbestos and getting the site into a position where it was more attractive to a developer. Because at the moment it was like, it's going to cost so much to get it ready for site development that actually it was almost making the site kind of worthless a little bit, or massively affecting the value. So we said to them, look, it's like peeling back the layers of an onion. You take one asbestos panel down, I don't know, there's 7 behind it. So you can pay for some testing to get it more accurate, the tender, or we can put these provisional sums in there. So we're having to do a lot more of that than we ever would before, which is frustrating, because it costs you money to do anything like that, doesn't it? And you're never going to get paid for it, and you don't know if you're going to win the job.
Yeah.
But we're kind of taking a fly on it, that if we don't do that, then we're having all these problems, and we're often then having arguments where, so we would tender a job and go, right, here it is, and then we want paying up to that point for our work, and then they'd be like, well, we're not doing the project, and be like, but you owe us for that bit, and then it becomes problematic because people feel a bit begrudged paying for something they're not going to then proceed with. So I know you're quoting for the job, but it's the same, you're begrudged because you've spent time and effort filling that in, and then it doesn't go ahead.
I must admit, there has been times when we've done a little bit more, but then we try and enter into a pre-construction agreement with them if we can. But it depends on the amount of money they're going to spend. And
definitely, But I would say the higher end clients, so if you can, I mean, I know we hark back to Jamie because I know him quite well, but they do a lot of work with like English heritage and local councils and stuff where their budgets are not quite so restrained, and they often have people that understand that kind of stuff, or they just accept that this building costs £2 million to paint it and decorate. That's what it's always cost, and now it's 2.5 because we're 5 years down the line. That's what's happened. But visitor price attraction tickets have gone up. They were £10, now they're £15, so there's like a direct correlation. Those type of clients aren't so susceptible, which brings me back to that kind of, you know, which market you're aiming.
Exactly.
£50,000 proper price sensitive. And I also think anyone in the domestic market up to like that kind of £1 million is still quite price sensitive. It's their own hard earned cash.
Absolutely.
English heritage, millions of pounds to dip into. So, you know, and they have to keep their sites up. They have a remit for that. But there are lots of places like that, like the council and stuff. They've got a remit to bring the EPCs up on some of the high-rise buildings and stuff like that. That probably would be a good way of mitigating against some of those ones that kind of are a bit of a time sink sometimes, aren't they? You do a lot of work and then you get nothing out of it at the end. And it's quite hard because if you start saying, well, I'm going to charge you, then they're like, well, no one, Fred over here is not going to charge us for doing the same job.
It used to charge apparently years ago. The construction industry used to charge for tenders. And you could almost say across the board to a few companies, let's have that policy, but somebody would then still.
Well, we used to get it in the, I mean, not so much now, because I think things have got a lot easier for people to do with technology, AI and all that kind of stuff, you know, quantity surveying and things like that. It's a lot quicker process. But definitely 15, 20 years ago, if you asked a contractor to tender a £500,000 job, they would probably want £1,000 on account.
It would stop people almost abusing us and just using us as pricing tools.
Or even just scaffolding, you know, to quote and design the scaffold would cost them money to have a quote produced for.
And to be able to design scaffold, you have to have certain qualifications and certain insurances. Because that's the other thing now, a lot of people have professional indemnity insurance, which has gone through the roof. So it's again, I don't think clients accept any of that.
It's the disparity between like the earnings, wages, or whatever, the cost of living type related stuff, and then the cost of things has gone up, hasn't it?
Yes.
So I think we're in for a tough few years, but I think if you aim yourself at that kind of more higher end market, like those ones, you want to put your time and effort into those as opposed to your like sub 200 grand, you know, extension out the back of someone's house or something like that, where they've got no idea that asking you to add 10 extra downlighters is going to cost them money. They're thinking, well, you're only drilling 10 holes rather than one hole.
No appreciation.
No appreciation that they've got to run all the wires through, and they've already put the ceiling up, so that's quite difficult. You know, you should have made that decision. They don't understand that because they haven't worked firsthand in it, or they're susceptible to changing their mind anyway, just because they're domestic clients. So I would personally try and aim for that like higher end client. Like we're being a bit careful with that now, like when we're tendering jobs, if we think it's vulnerable to that issue, we're trying to make it clear from day one what we're doing. Less so if it's a bigger project, weirdly. Like the bigger the project, the less vulnerable we kind of have to bring their attention to, because they're kind of better understanding of it.
And they've got the right people hopefully behind them who've done the design structurally and for the architect as well. So
and they put money into it already, so they're aware of the fees and stuff, as opposed to smaller clients are less aware. And everyone seems to know anybody down the pub that will paint that for half the price or whatever it might be.
But they might be going up on a ladder and not scaffold, and that's the bit. And
health and safety is massive as well. But again, you have to explain that to people. You know, that you can't just go up there on a ladder and do that anymore.
Well, they have a liability now. That's the thing clients don't realise, is that they are ultimately responsible.
Well, even as far as the client pushing the job along quickly as well can come back on them, because if you pressurise the contractor and they cut corners and then they're under time pressure, you can actually come back on you that you induced that issue that has happened. I had a client where someone actually fell off some scaffold and they were pestering them to get on with the job, and then they did go to court and they were asked to attend court, and they were like, well, some of this contribution is because you pestered the contractor to death to get on with the works quick. They told you it was 8 weeks and you told them you wanted it done in 5. Well, you kind of contributed to the feeling of having to rush it, because there was this implied thing that maybe there might be some cost implication if you did it quicker. So,
Yeah. Were they all right, the person who fell off the...
No, they passed away.
Oh,
It was quite a big case, actually.
dreadful.
Yeah. So yeah, they were taken to hospital and didn't make it through. But so yeah, that's why it got really serious,
I can
because it was
imagine,
like,
yeah.
there's a death here, and we need to look into the exact circumstances that happened here. So yeah. But yeah, serious stuff, like from the client thinking it's quite innocent, going, oh, you said 8 weeks, is there any chance you do it at 5, because we've got, I don't know, got to get the hotel open or whatever it was that they were doing. So, yeah. People don't take that into consideration, I don't think.
No.
So those higher end clients, I think, are less time consuming, weirdly, but you can end up doing that all eggs in one basket problem. So it's a mixture, isn't it?
That's it, yeah.
Yeah, I think we're just in for a tough few years, I'm afraid, with that.
Back down the hatches, I think, isn't it?
Yeah, stable in, and you'll do wise to, diversify the business into, buying some freehold assets and things like that. And kind of
I look forward to that journey,
spreading your stuff around a little bit. And then the second biggest challenge is you've had a client not pay us a large amount of money, which we touched on before on a project recently. I know you've kind of weathered that storm, but have you put in place things so that doesn't kind of happen again? Or
so we did have things in place anyway, but to a certain extent, the clients set up so the project was in a contract. It was a separate company.
Yeah.
So they were all completely protected.
Yeah.
The 3 clients were all multimillionaires.
Yeah.
Set the project up, and then so when it failed and they didn't pay us,
they closed that company down. And
so we then went into, so as I say, we had a credit agency check everything, and it was the last payment we didn't get paid. And by then we were just wrapping up the project, because it was a 10-week, so we'd sped things up.
Yeah.
I don't know what we could have done differently, except maybe have an escrow account, so the money is there, it's transparent, everybody can see it, and then we draw the money down from there. I think that's potentially what we would do in future if we felt we might be vulnerable.
Yeah, so I think if you feel you're a bit vulnerable, it's perfectly reasonable to ask for a solicitor holds an escrow account.
Yeah.
And then normally what would happen is you would have a surveyor come and oversee the project, and when they sign it off and say the money's due, that's when the solicitor releases it. So it kind of ring fence. You're the builder, they're the client, and then this person in the middle, the surveyor, says, I've signed off for all this work, builder's done a really good job, you have to now pay it, I'm sorry, even if you disagree with the surveyor, client, you've got to pay this money, and then it comes from the solicitor down in an escrow account. The issue that you've got with doing that is that often people will be using finance, so they might not have the money in the bank in the first place, so you'll cut out that bit of the market. But you can always say to people with the finance side that I referred to earlier, where you put the first 50 in, and then every time it draws down, you can say, I want written from the bank that when the surveyor signs off, they will pay the bill, and it will come. The money will come to us, because often you find that clients get the money, and then they might, they've got their own, they've got another project going, and the money gets all a bit lost and messy, and then you guys don't get paid anyway. Making sure you draw down small and often, so you don't get to the end, because I'm guessing at the end, what was it, about 10% of the value that you got knocked for? Or
180,000.
Yeah.
So, sorry, get my head in there. It was about a quarter of the money, because we were doing fortnightly payments, because we don't do any less than that.
Okay.
So we were on top of it. It's just there was one that slipped through the net.
Because normally with the projects we do the surveying, we do the valuations as we go along, and we retain 5%.
That's
so
it.
5% is always as the contingency. So when you get to the end, the very last bit, you actually only owe 5% of the project. So if the client suddenly runs out of money, it is only 5%. So it shouldn't be detrimental to the relevant size of the builder. If it's a 50 grand project, obviously 5% is 2.5. You'd hope they'd be able to weather that storm. But at that point, when we sign it off, we then say you need to pay 50% off the 5.5. So you actually only owe 2.5%, and that's the
retention period.
Rectification period.
Yeah.
So so I guess the problem that you've got there is you've ended up like toward the end of the project's come and you've got like 25% of it hanging out. That's the thing to avoid, isn't it?
Yeah. And I think also we need to be far more reactive. I think at that time we didn't have the team we've got now.
Yeah.
And I think if we could do it differently, we would literally, we're stopping. We won't do. We need the money. We're not going to carry on.
Those directors, they closed that business down, and then so they just said, "Oh, it's done," and that's it. And then
so it's been sold on.
Yeah.
For a certain amount of money, but they pipped us to the post by going into administration.
Right. Okay.
By about a day, I think it was.
Yeah. So those directors have ring-fenced themselves because they've sold it to somebody else to put it into administration. Yeah. Okay. I mean, the problem is that's quite common in the developing world, especially if people have got a lot of money.
And for them, I think it's quite common as well.
Maybe not common all the time for people to automatically do the administration thing, but very common for people to ring fence stuff, because you wouldn't want a £1 million project to take down £100 million empire. So they're only looking after their own best interest at that stage.
And we genuinely thought it was a good business model.
Yeah.
Bruce and I we believed in it, and that's why we stuck by it for a period of time, and we thought we were going to get some money still. And so
yeah, it's they're tough on that, isn't it?
It is. It is. It won't happen again.
No. But you could have gone and, I suppose, served notice and taken back some of the materials.
They closed it down because they had a MRI scanner in there. We built a Faraday cage for it. There was quite some, but they did all that before we could get.
Right. Okay. So moving on from that, you got your kind of third challenge, if you like, or whatever, is being able to employ skilled people. That there is a massive shortage of skilled trades. Then we kind of touched on the apprentice scheme and the rest of it. Do you feel that the skill set that you got in the business, like when you're those more mature people, as you refer to them, training those people, that skill set is good, or is that something that you're struggling with in terms of kind of getting the right people in and so on?
Still trying to find the right people to come in, and it's having that confidence to commit to them as well and make sure we've got the workload to do that. Although, as I say, through the CITB we'll get it funded, we'd hate to take somebody on and then not be able to fulfil that commitment. But it's I would say a lot of it's attitude. And that's something I've learned through just running a business, is you can teach somebody anything if they've got the right attitude. They can have all the qualifications in the world and come into your company and not be the right fit. Whereas if they've got the right attitude, they'll learn like a sponge. And that's been the hardest thing for us, is to find young people with the right attitudes and teach them. Employment is inherently difficult, getting the right people in, and you have to kiss a lot of frogs to Absolutely, that's a phrase I use it a lot. And I think it's harder to replace people as well. So as much as it pains, sometimes you have to do extra to hold on to decent people. But yes, I think the recruitment industry is difficult. I mean, some of the stuff that we've done here to assist us a bit is on our website, that we have like a kind of come join the Charles Cox family type page on there with a video about some testimonials from staff and the rest of it, to encourage people to put forward their CVs, even if we don't necessarily have a job available at that time. So we've always got that kind of next crop of people, and I've always
been looking for new staff all the time, like when I'm out and about or whatever, I'm trolling through LinkedIn or something, and I'm like, that person, I want them in my business.
Yes.
They're not ready to move or whatever, but I might comment on their posts and like and stuff, and I'm over here if you ever want to do. And that's like a constant job, and that's something that Lisa could probably do for you as well in terms of business development role, is to scout out potential target people and maybe put on your website that, and with your social media channels, come join the Hawes Group family or whatever it is.
Yeah, because that was something I was really naive about when I set the business up. I thought that's, well, why wouldn't they want to come and work for us? It's down to us to choose them. But then it's gradually you realise that you have to really present this good company for people to want to come and work for you.
Yeah, massive change since the pandemic, and I think that pandemic will be a landmark change in everyone's lives or whatever. When we're much older, we'll be referring to the grandkids about the pandemic, and they won't understand post and after, before and after. But yeah, employment, I think, has changed a lot. People are not as willing to work as hard as they were. It's just a generalisation, whether people like me saying that or not.
Yeah.
People don't want to work so many long hours or whatever. But I do think the people that do want to do a career and the rest of it will really flourish, because they'll stand out like a sore thumb compared to your generalisation. Whereas before, everybody kind of wanted to do the best thing. Like, I find it quite hard to get people to do like the next job up for a little bit. Like, give a go being a head of department or whatever, and if you're quite good, we'll give you the promotion. Gone are the days of like, oh, I've done it for 6 months, can I officially do it now? It's like you have to offer it to them to start with and so on, and it's very strange or different to how it traditionally was. So yeah, you're right about that, kind of like you need to make your business attractive for people to come and work here and do all those things. So and simply just paying well isn't always enough either. Some people like the flexibility or the freedom in their job, the freedom in working from home, the freedom in managing their own portfolio of things.
We have a health scheme as well that we pay for. But I would say on the flip side though, with the new HR stuff that's coming in, it's really, and I think that's the daunting bit for a company of our size, is once you've committed to employ somebody, it's really difficult. Yeah. If they don't work out. Yeah. To get rid of them. I
mean, make sure they have something like about 500 rights.
Absolutely. Before they even sign the contract.
Yeah, exactly. And then they have thousands more after that. But you do have some rights as employers, so you have to make sure they're in your contract. And a lot of people we've given contracts and they're like, oh, that's not really fair. It feels one-sided, your contract. It's like, well, actually, the 7 things that you think are one-sided are actually the only 7 things that I've got to protect me. So I can't remove them because they are like, literally, you have like 2,000 rights, I have 7.
Yes.
So I'm not relinquishing my 7 rights in exchange for your 2,000, because I can't even ask you to relinquish your 2,000 rights. So yeah, I think that's important, but it's an education thing again.
Absolutely.
Sometimes you have to explain to people. Yeah. The reason I've written that in there is because of X, Y, Z. Did you know you've got all these other rights? Because a lot of people don't even know what their rights are. So.
And most people probably wouldn't be too acrimonious in it. It's just there's this. Yeah. Unfortunately, we've encountered a few that are.
Yes, yeah, but
just put you off.
I think that's the change in attitude as life, and you just have to adopt to that as a business. So you have to evolve. So. Yeah. Okay. Well, that's been. Really great. I don't know if there was any other bits you wanted to discuss or touch on at all or whatever whilst we were having a chat.
No, I don't think so. I think we've covered the broad spectrum.
Yeah, that's good.
Running a business and
definitely, and its trials and tribulations. Yeah. Well, it'd be really great to have you on in like a year's time, see if you kind of got to that goal
of
getting
Thank you.
Your HMOs up and running, or whatever side you need to go into, and see where the leaflet dropping and all that kind of stuff come about, and and that you've got a good team and you're still growing and the rest of it. It'd be nice to have you on. So for the audience, how do people get hold of you if they want to look at getting quotes or work done for you or tendering or whatever?
So you can email me on at Sarra at hawesconstructiongroup.co.uk, and Sarra is SARRA. or you can phone our office. Should I say the
Yeah,
number?
it's your pitch.
So my mobile number is 07715 078126, or we have got a contact point through our website, which is www.hawesconstructiongroup.co.uk.
Okay, fine, and they can go there for all manner of things.
Yeah, you can view case studies that we've done. Our team are on there. I also do quite a bit as an enterprise advisor with the Careers Hub as well.
Yeah.
In construction, so yeah, you can see all of that.
No worries, and they can presumably follow you on LinkedIn or something like that.
Oh, sorry, yeah, we're on LinkedIn. Yeah, we're on LinkedIn. We're on TikTok, Facebook, and I think we're on X, but
yeah,
maybe
who knows? X, Twitter, whatever.
Yeah.
You can find you on various social media platforms. So,
yes.
Yeah. Good stuff. All right. Well, look forward to seeing how it grows.
Thank you.
I know you follow us as well, so I'm
Yeah.
sure we'll find out a bit more and hopefully see you in a year or so.
Brilliant. Thank
All right.
you.
Take care.